Good morning. How is everybody?
Good. Good morning, Trent.
Good
Good
morning, Trent.
morning.
Good morning.
Good morning.
It's especially good this morning because I have my morning edge cup with my morning edge coffee.
Nice.
I haven't got my shirt yet. I haven't got that yet, but it's coming, Trent says. So I had to go with
The
wine.
Hawaiian theme. Festive.
That's where it goes.
I asked my daughter, I was like, what color t-shirts are in fashion, color is in fashion for men? And she looks at me and goes, black and white.
That's when you asked me
Like,
when you
okay.
asked me what color I wanted, that's what I said, black, of course.
David has what we see. He has
Yeah,
sort of
David.
a leather gray and or gray, and Payman
Payman's
has
got
more of
black
a
on.
navy blue.
I
know?
have refused to wear black for 1 year. None of my
Did.
outfits are black anymore.
Really?
Really.
Yeah.
I look at my wardrobe and I'm like, why is this so dark? And I'm like, well, maybe it's a reflection of your internal madness. That's at
I
least
think
what my
it's for
wife
me
thinks.
watching westerns. All the mean guys always wear black. So I'd go into meetings like in corporate meetings. I'd be in black, just to give you that edge. So,
Yeah.
all right,
I've
we
got
should
it.
be rolling. Can you
All
shut
right.
down all this? Can you shut down the sound? I'm hearing some
Are you
CNBC.
hearing me?
It's CNBC or something. Somebody's on.
Sure.
There we
Go ahead.
There we go. Okay, so let's get started. It's Monday, April 28th.
Sorry.
None of this is financial advice, of course. It's going to be a big week, and I'm going to direct over here to the Platinum Channel Discord, and I hope you guys use this because we put a lot of information on it. We have news. So someone went in my office. We got crypto. We've got chat. We got charts of interest. This week, it's really going to be about jobs reports. We've got ADP on Wednesday, initial jobs on Thursday, and this is all on the Discord, and it's also on the morning newsletter.
Yep.
But then we have
Give
non-farm
me
payrolls,
four of them right now.
Got it.
and,
Go ahead.
and we're going to be looking at these jobs, to see if the unemployment's going up. We also have GDP too, and also it went down a little bit here, and I put on the major earnings this week. Now, about 40% of the S&P announced this week. So these are the major ones you can see. But the big ones we have are down at the end. We've got Amazon on Thursday, Microsoft and Meta on Wednesday, Chevron on Friday. You can just see Coca-Cola's on Tuesday. And of course, on Friday and Saturday is the Berkshire Hathaway shareholder meetings. You'll see a lot of that on CNBC. I'm going to head down there Friday to see what's going on, but that ought to create a little excitement in Berkshire. But a lot of names. So if you're swing trading, I always get out before earnings because I don't want that 50% chance I'm going down 15%. So on investing, it's a little different, but on swing trading, it's certainly different. Charts of interest every Sunday. I go and I put charts of interest on for a couple of things. One is the momentum trading, and we had a ton of them this week. Not momentum so much, but I put them on Sunday. You can look at the names I put on. The ones with the asterisk, those were on from last week too. Be careful of Netflix before it closes above the upper Bollinger. And then I put the charts on. And this week we had a bunch on under the 200. Okay, I had 21, which is, for the last couple of weeks, we haven't had really hardly any just because of the way the markets are going. But I have 21 charts under the 200. So I had to do 2 of them, you can see. So go check those out. I'm not going to go through all of them today, just because they're already on the Discord. But I am going to go through. Let me get a couple charts here. All right, we'll start out with the SPY. Interesting thing on the SPY. This is the S&P 500 tradable ETF. Here we had the tariffs. The market kind of went a little bit out of control, as I said. We've had trouble to get back above where we ended on this big old mega green candle. Well, we closed a little above it. on Friday. It's not enough to give me confidence that it's going to break it, but we'll see if it comes back or comes back down. The oscillators look good on the SPY, and we also have some resistance at the 50, followed by some sells up here about 569. But we'll see what the strength on the SPY is today. You know, we still have this tariff issue thing going around and a lot of news this week. Qs, and NASDAQ 100. This actually made it above, okay, with a full candle. So this one I'm a little more, and it also made it outside the downward channel you can see. But again, right above it, we got the 50, and then we've got resistance. You know, 480 is the 50, so that'll be resistance at that level. We'll see. The oscillators look much better. I mean, we were talking about markets being stable. They weren't stable back in this area. They're just all over. Now we're starting to see a little more of the stabilization like we've seen here. We'll see if it can continue, or do we get, you know, another tweet or a news conference or something from China or from the administration that makes it all go away. The Dow did not quite make it above our mega green candle yet. So it's still kind of lagging behind, even though the oscillators look semi-decent. But still, there hasn't been a runner like we've seen the S&P and the NASDAQ. And of course, they don't have, this isn't heavily with the Mag 7s in it either, the Dow. So the other two are. Look at a little bit of gold. Gold was hit kind of a resistance level. And then Friday closed below the 9. We'll see if gold, you know, but I'm looking at the MACD going to cross over. We'll see if gold is done for a little bit on a run. But it can also pop up real quick, you know, with any news that comes out. And then we look at the dollar index. Dollar index has just been kind of flat going along the intermediate support level. We're seeing just flat on the MACD. Was trying to get back across, but again above the 9. But nothing's really moving on the dollar as of yet. But it's not sinking as much as it was. And then Bitcoin has been pretty resilient in all this. You know, it's above the 200. We had a line right here where we went back and looked at Bitcoin to see. This will take me back where we've had support and resistance right at this level. You can see, you know, it gets above it, it becomes support, gets below it, becomes resistance. Well, we're starting to see a little bit of a breakout to the next level of support and resistance, which is right here. So that'll be the next level I'm going to look at as we're moving sideways. And again, this has been more structured. You know, it hasn't been as wild as you see in the S&P and the Dow. So this is more of a normal market pattern, ups, downs, sideways again. So again, Bitcoin's, you know, hanging in there. We're at 95.3 right now. You know, it wasn't too long ago I put my line in the sand at 82 and said that's where, you know, I would be buying. And the reason I was is because I see where it's hitting on support. Got a little bit below, but came back up. So Bitcoin is being resilient in this market flux that we're seeing. NVIDIA. NVIDIA is still kind of in its downward channel. It moved up a tad. It's still not above the mega green candle yet. And that's right exactly where about 50 is. And you'll see some resistance on that. So again, we got some oscillators that are looking pretty good, but we got a lot of resistance above it, and it's still below the 200 on NVIDIA. Momentum stocks, we had a couple momentum stocks I'm going to go into our list. This is from last week, which is Netflix. Netflix came out with earnings. There's no upper resistance level, but we do have some sell orders at $1,134.93. We're also trading 4 times outside the Bollinger Band, which you normally don't do more than 5. So we might have one more, but I almost might expect to see this price action move inside, kind of sideways and inside the Bollinger Band. We're seeing a little bit of roll on the MACD, but Netflix has been you know, since earnings right here, has been a pretty good momentum stock. So we had that on last week. A new one that we talked about a little bit last week is Take-Two Interactive. Is kind of taken off a little bit up along the Bollinger Band. We do have some sell orders around 230.28. The oscillators are looking pretty good on take two. We're above the 200 also, but a momentum stop. So watch out for when the intermediate resistance level shows up on take two. And I'll do under the 200 is our other list. A couple of them that we had on from last week are still on this week. That's Coinbase. There's where we put it on right here. It's gone up and it's following right along the upper Bollinger Band. Of course, this is following the price of Bitcoin and momentum of Bitcoin. 2 times outside the Bollinger Band. We're seeing the oscillators look okay. You do have some sell orders about 222, and then you've got the the 200 SMA at 227. So there is some resistance above it. On the bottom side, you're going to see the 50, and then followed by the 9 and the 20 for support. That was on for last week. There's another one we put on last week, right at this point. Okay, and again, this one's been a nice run. This is the kind I like, right within the Bollinger Band and between the 9. You got again, you'll have probably some resistance at the upper Bollinger Band, but it's still heading up. And then you'll have some sell orders at 77.98. And again, it's trading under the 200. Make sure you take those risks into consideration if you trade these. And the other one we've had from last week that's still running is Align Technology. We got in about at this level here. Again, following up the upper Bollinger Band. Oscillators are looking pretty good. You're seeing a little resistance at the upper Bollinger, and you'll see some sells about 189.92. Some of the new ones that we're on, just to be, Apple is now, trading underneath the 200, but the oscillators are looking good. We've got support at the 20. We got sell orders up here at about 217.82. So we have a normal market, not any shenanigans in it. You're seeing some momentum on Apple. Oscillators are good, and resistance right up here at 217 and support at the 20. So we're starting to see some mag movement to the positive side, and that's why we're seeing the Qs and the S&P go above that that big green candle we had. Amazon is another one that's again not quite past its green candle yet, but it has some positive movement on Amazon. Again, watch out for earnings. I always get out before earnings, and we got some earnings coming up. So again, on the upper side, there's some sells up here, right about at the 50, okay, 196.55. And we got support down here at the intermediate support level at 183. So we're starting to see the movement back up on some of these Mag 7s, which is good. I'll do one more on the under the 200. I'll do 2 more on this. First Solar actually got above. It's been trying to get above the 50. It closed pretty good above the 50, following its upper Bollinger Band. Got some resistance at sell orders at 147.57. But you're starting to see more of this kind of move up in the charts. Before we were seeing down, then we were seeing kind of sideways, and now we're starting to see more of these charts go up. Again, under the 200. And the last one I'll show under the 200 is ZBH. Again, goes up, comes down, concentrates on the sideways pattern, starts coming up. This one closed above the 9 and the intermediate support level 2 times, a little bit of resistance here at the 20. We got to get past that, and then the next resistance is at the 50. I would want to wait until I see some confirmation that we get the MACD crossing over the signal line with get a little strength for ZBH. Now the watch list stocks, we got quite a few of those. Again, these are the ones from last week. Berkshire is always interesting on the week of their meeting. This is the all-time high line right here. If we can get past the all-time high and bounce, we have some room to run on Berkshire. We'll see what happens in the meeting, what Warren says, and how it goes off. But again, Berkshire's above the 200, above the 50, rising, 20s rising, 9s rising, but kind of a sideways pattern the last 3 days. It's kind of waiting for the meeting, but definitely on the watch list. IONQ. Try to get through these a little bit fast. This was on the watch list from last week. This is where we put in. Again, it puts it wicked up to just underneath where we're seeing some sell orders, about 32.48. So IONQ above the 200. The only thing that's kind of you see a lot of this in this charts. The 50 is still going down. The trend on the intermediate term is down, but on the short term with the 20 and the 9, we're seeing it go up. And again, the 200 is still trending up on this one. So that's definitely a positive. And then DBX was on our list last week. And DBX, has been going up 3 days, 4 days. Once it got past the 200, 200 was a nice level of support. And now we're seeing some strength and momentum heading up on DBX. It's following the upper Bollinger Band. And then you've got some sell orders at 29.62. We closed at 28.58. And your support's going to be down here at the 9. So a little bit below where cost basis was. For some new ones out there, I'm going to go through these quick. AVGO, Broadcom, crossed above its 200. It's been under the 200 for a while. It's bounced, got one above. I might see if it's going to back test this a little bit, but normally if you get a couple above the 200 and some momentum, you might see Broadcom have a little momentum, a little upside to about 205.73, which is where we're seeing some sell orders. So see it again on some of these tech stocks are coming back a little bit. Use your trading plan. CrowdStrike, it's another one. Look at that one. That one just popped up. Again, watch out for earnings reports, as earnings reports can tank these things or send them to the moon. I'd rather get out and not get tanked. But again, following along the upper Bollinger has a lot of momentum going for it. I would look for it maybe to pull back in a little bit, or it could run up. But then you've got definitely a hard line of resistance at 455.59 on CrowdStrike. Sorry, there's just a ton of them, guys. I spent all day Saturday. Huntington Ingalls Industries just crossed above its 200. I want them to see if it can maintain another day above this 200 or it's going to pop back down. So these I look for. It took a while, 1, 2, 3, 4, all these days to get past it, and it did. Let's see if it back tests. If it can get past that, we have some sells a little bit above 233, but then resistance hard levels at 253. So watch this. I wouldn't be, buying in on this one today, me personally, but it's something I'll be watching for tomorrow. Trent's talked about this one. And this is BBAI, Big Bear Holdings. It took a pop-up. Again, it was running right along the 200 underneath. Took a nice pop-up on Friday. I don't know what happened. The oscillators all popped up. It's following the upper Bollinger. We got some sell orders just below the 50 at 393. It closed at 353. So right now that's about 40 cents above. And then on the downside, you go down to the 20. So again, the smaller stocks, something that Trent's talked about, but it's something I've been watching. It did a little pop. So that's why it's on the watch list this week. CDNS. We talked a little bit about this last week, a little bit. CDNS went over the 200. I like to see this. Came up, came back down and tested. Of course, on the upside, you got resistance and you got sell orders around $300.95. But again, some good strength on CDNS. On the lower side, you want to use the 200 as support. And what more do I have? Oh, here we go. A lot of people like this one. App 11 is fine. It rolled along the 200, finally got above the 9. It's popping up a little bit. You're seeing a little bit of expansion on the Bollinger Bands. The oscillators are looking pretty good. Just be careful. You're going to have some resistance at the 50. You're going to have some sell orders about 312.57. So I've got literally a bunch and a ton of better stocks than we've had in the last 3 weeks. We're seeing the market stabilize a little bit. We're seeing it come up. Can it be knocked off its rocker again? Absolutely. We can get a tweet. We can get a press conference. We can get something out of China. We don't get anything at all, and it can knock this market right back down. We're still in a news-driven market, or we can get India and Japan signed a trade deal, and Powell's going to lower the interest rates, and then we see the market take off. So whatever you get into, use your trading plan, use your investment plan, follow that, take the emotion out. Always have a stop on a trade for sure. If you're in an investment, know why you get in, know where you want to get out, and that's going to help you be more successful as far as managing your wealth and managing your risk. Sorry, Trent, that was a lot, but Mondays are always a lot. I'm going back to my morning edge coffee.
And well, Mark, a Monday is always a lot, so it's
Oh,
good that we
that's
go
good.
through that. The nice part of that is there are ideas that you can act on this week, whereas in the past month we haven't. And what I wanted to do was today was just really focus on take a look at the last quarter, you know, the first quarter of 2025. And I'll bring up a chart here. And this is a quarterly chart of the S&P 500, SPX. And I think what we all can see here, see, get my person window out, is that this here is first quarter of 2025. We came down to, I use the 15 period moving average. This is 15 quarters. And as you can see, we came down to the low of 4,835, and we have bounced off it. Now we have 3 more trading days in this quarter, so things could change. If I go back and I look at, say, something maybe economically similar to the environment we're in today, and that is the 2006 through 2000 period of time, I may be seeing something similar. This is July of '07. This is October of 2024. This is October of 2007. This is October, or excuse me, what is that? January. Where are we here? Right here. That would be January of 2025. And then as we enter here, this is the April quarter. So this is the end of this quarter here. So this is a 3-month chart of these. So how could we close out the next 3 days? I don't know. We'll have to see. But there is a sense of optimism in that we have hit this 15 3-month period, bounced off it, and recovered a bit. So watch how this quarter ends here in 3 days. One thing to take a look at is that we talk about systematic investment strategies, vol strategies, all algorithmic trading. All these are computer based on if-then statements. So there is an enormous amount of that. And come Friday, as long as we don't see some geopolitical, emotional liquidation sale, there is a good chance we will start to see these systematic trading funds start to look at their risk levels and go, okay, it's time to get back into the water, start putting our toes back in. And if we see that happen, as long as we don't have a blow up or some bad government report or a tweet from the Trump administration that blows things up, there is a very strong possibility, and this is totally based on technicals and algorithmic formulas. We could start seeing next week a buying or rebalancing of these systematic trading funds. And take into account, these are massive amounts of money that are trading based on risk and risk off. And they have been in a very risk off environment for quite a while, since February. And if the numbers line up and the if-then statements line up, we could start to see a adding to the risk on side of these funds, which would potentially help us push higher or challenge the all-time highs in the S&P. So keep that in mind. And I think the other part of this is it may not be all in tech. It may be somewhere else. I was reviewing the 12. I don't know, those who look at the 12 portfolio that I've put together. If the quarter ends like it is today, we will be rotating out, or I will be rotating out Tesla out of the equity side, and I will be putting in Berkshire for the next quarter. That's not a tech company. That's an insurance driven, diversified portfolio of companies. And the one thing to take into account a lot of in this environment, if we do have a stagflation environment, insurance companies oftentimes do better environments like that, because what's the one thing insurance companies never do? And that is lower their premiums. And in most cases, we have to have these certain insurance mechanisms or insurance companies, because we have to have homeowner insurance, we have to have car insurance, we have to have health insurance. These companies are going to most likely do better in a stagflation environment. So keep that in mind. And I think Mark's watch list is a prime example of of a possible shifting. But like I said, if we can avoid a emotional liquidation sale from a geopolitical and stock market standpoint, then we potentially are back into a short-term or intermediate-term move higher in the market. And I think this is where you start to review your grocery list, like I've talked about in the past, really diligently. Who's got the good fundamentals? Who's got the depth when it comes to cash on hand, and so on. The other element I would like to, I've read this weekend so much about India and this, and Mike brought it up a while back about how the president, Trump, is positioning with India to potentially replace China in the future. And I came across more commentary. I was watching the All In podcast this morning or yesterday, and they were talking about India all throughout it. And it was very interesting that all of a sudden you're seeing India come to the surface when it comes to headlines. And so there's a way, it's a hard way to play. It's hard to play India other than through ETFs and mutual funds. I looked for ADRs. I looked for specifically companies that dealt in raw materials or raw minerals and those kind of things, because that is really a tipping point, a fragile relationship that we have with China, is because they provide a lot of these raw materials that we need, like lithium and copper and all this stuff. They have a very big hold on that market. So it's hard. It's a challenge to find companies in India who are doing it. But they're doing it, but how do we get involved in those companies here? I believe it's in Nevada. There is a big discovery of that, but it's so premature. It's so early. How do you profit from that? And so I look at, if you're looking from the long-term perspective, where is this all going? And I think this shift to India is heavily coming into play. And you can see, you can play that via the ETF way. It's probably a safer way. EPI is one example. I'll pull up a chart here on these real quick. Bear with me here. No, that's not it. So EPI is one of them. You can see here. This is let's go to a daily chart, not a quarterly. It's got more of a less than 1 million in volume, so take that into account. But this is a Wisdom Tree India earnings fund. They focus on earnings when it comes to Indian companies, still below the 200, above the 15, and above the intermediate or 62 day trend. So that's definitely a positive in my sense. Looks like it's going to open up roughly 70 cents or so higher today. But this is getting a lot of attention. So that's EPI. And then iShares India ETF, which is INDA. It's got more trading volume, so about 6 million or so in volume. Looks like pretty much on average. So it's very liquid. That would be an opportunity. Looks like it's going to move up roughly another 70 cents as well. So this is one of those, longer term perspective. If you're looking down where the world is shifting from a macro standpoint, from manufacturing to that kind of from China to where is it going to go? We saw that with from China to Vietnam to Indonesia, a couple of those countries years ago. I think we're starting to see that again, that shift. And you saw it with Apple, what, a year or 2 years ago, they opened a factory. They're now talking about the majority of their iPhones coming out of India. This could be that play. Take into account for 20 some odd years of my career, I have heard India is the next greatest thing. It hasn't materialized yet. This is the first time, I believe, in a long time that we've seen a concerted effort by the United States to build a better relationship with India when it comes to manufacturing. So this is a longer term idea, taken into account. This could take years to develop, but it is showing signs of favorability over China manufacturing. So keep that in mind. So that's my two things. Quarterly, if you look at the S&P, it don't look all that bad. From a long-term investment perspective, a shift from China to India, other third world or developing countries, could be another shift, and India is one of them. So let's open it up to the floor and see what everybody's got to say, opinions, ideas, that kind of thing. Oh, by the way, I just want, oh, he's not here. When he comes back, I'll say something. But go ahead. Anybody got questions? Oh, Bob. Hey, Bob, I just want to, really go for it on the Blue Man Group audition you got going there. I see you got your blue hands. I figure you'll put your blue head makeup on. So good luck on that audition today.
That's called machine working. Trying to keep
I
my
thought you,
hands clean.
I thought you were performing surgery on somebody.
I was like,
Yeah, I got a few machines acting up last week, so it needed my attention. And it got it over the weekend, so I'm still refining the issue.
It's nice that you're sterile. That's good.
Yeah, yeah. So it's not the thing I really like to do, but I do it because it saves me a lot of money.
Yeah.
Yeah,
But it's
lower
good you
cost
know
than a
how to
maintenance
do it.
guy.
What's
I
that?
got a question.
All right, go ahead.
Um, Kerry is already giving the buy signal today. I'm looking at the charts and I'm wondering, on the other video, he mentioned that around end of June is going to be the bottom of the market in his own personal opinion. I'm wondering if I can get more guidance as to whether I should start buying now, or should I wait for the market to go lower, or am I risking it, or what?
That is
so
the
I think
$64
it's
million
very,
question.
I think it's very important to understand his perspective.
Right,
He is looking at things from a fundamental standpoint. Okay, this is earnings per share, revenue, cash flow, that kind of thing, right?
right,
Those can look really pretty, but when you look at it from I don't want more of a quantitative side or a technical side, and your visual is a chart, I think that is more of what the market is doing. Fundamentals, when the internet came about back in, say, 98, the shift, the ability to trade using a computer escalated. And that came down. You went from invest or hedge funds and institutions hiring economists, financial people. They made a shift to hiring physicists, computer programmers, and people not and the small guy on the totem pole was the economist and the financial guy. That has escalated, that has developed. And this market, I talk about systematic trading funds, they are not looking at fundamentals at all. A lot of the people that I follow don't even know what the company name is. They're looking at the mathematics. Kerry is looking at things from a fundamental standpoint. What should be? I believe it is so very important, very important. You have two sides of the coin when you look at markets. You want, right now, I think that fundamentally, you want companies who have cash or access to cash and liquidity. I don't think we're out of this. We may have a good upside in the next month, but overall, the numbers, the strain on the system right now, the over leveragedness is going to take precedent at some point. That has to reset. And in my opinion, a company that has a good cash holding, a good, foundation can survive this. Look back in history, look at the companies who were cash poor. Did they survive the great financial crisis? I'm not talking pandemic. That was an easy one. We just pumped money into the system. The great financial crisis was probably the closest thing we've gotten to when it comes to the Great Depression. When you look at this, you have to have a two-sided approach to this. So his fundamental analysis is cheap. Things are cheap. When you look at the market from a structural standpoint, a systematic trader standpoint, a quant model standpoint, a lot of questions. And that's where I think you have to step back and go, okay, what fits my risk tolerance? What fits my comfort zone? Am I going to be up at 3 a.m. just pacing because I'm questioning my decisions? You have to find that in your process.
Okay.
Kerry's process is Kerry's looking at 100 years.
And can I interject a little too?
Yeah.
That was a really good explanation. From a technical point of view, I'm just going to show you. I go back to Paul Tudor Jones. Okay, this is the S&P over time, and back, we had a blip back here in October of 23, and then the S&P price action went above the 200 and above the 50. And this is the daily chart. And had you just used the 200 like he does, he would have gotten in at 436 and change, and he would have rode it all the way until about where it crossed over at 572 and got out. Personally, for me, on an investment on the daily chart, and I did this with my wife's 401k, and this is just what I do, and it's not by advice. When we got to the point, and I watched it, her 401k, they don't have much choice in it. You got S&P 500, you got some bond funds, you got some international funds. So majority of hers was in the S&P. So when we watched this, when this price action was coming down, and it crossed this is where I got her out, okay? And because of this long-term trend indicator. And she's been out since that point when we went into money market on her 401k. And until it comes back up, and you're seeing that the 200 is actually starting to trend down, until it comes back up and gives me some meaningful progress and momentum above the 200, that's when I'll probably put her back in. Okay, and I'm just going to use that simple strategy from a technical point of view. So again, like Trent says, Kerry's looking at fundamentals. When I look at it, this market got broken, especially right in here structurally. And now it's starting to come back a little, but it's not there yet for me. For me personally, not financial advice. So did that help at all?
Yes.
Okay.
It gives me a good answer. Thank you.
Yeah, you're welcome. You guys keep asking, what if it were me, what would I put money to work in today? And I hate to do that. I mean, I'm in MicroStrategy, I'm in Berkshire Hathaway, for sure, and I do trade those. I looked at. Let me pull one up, and I'm not. This is not financial advice. I'll just show you what I look for. Okay. This is ServiceNow, and ServiceNow had earnings and popped up. Was able to get above the 200. And a lot of times you'll see when it does this big pop, it drops back down. But ServiceNow on Friday closed a little bit higher. Okay, so I'm looking, would I buy in right now? I don't know, because I want to make sure I don't go back under the 200. If I did buy in, I'd put a stop in on a trade at the 200. And I'm not telling you to do that, but the momentum is good. And you've got some room to run up to the where you see sell orders at 1,010. Okay, so depending on your trading plan, let's say you got in at this point, put a stop, where you're going to see resist or support, maybe a little below it, maybe a little above it. It's whatever you think, maybe on the Bollinger Band. And these are things you learn. That's why I want you to paper trade and get used to this. But if it does continue to run up, and again, it trades 5% of the time outside the Bollinger Band, we know that it'll probably come back in this way. But again, and if you can make it up to here, throw a trailing stop in there, at $1 or a percentage. And if it comes down and hits it, you're doing good. And then up here, there's going to be some sell orders at 1010. You can put in a sell, right under that and write it. Okay. But you got to protect to the downside, because in these markets, you don't know if it's going to go up or not. I don't know if it's going to go up or not. I in fear that I think it's going to go up based on past data and what I'm seeing in trends, but I can't guarantee it, especially if someone comes out with a tweet or something, and knocks this off, or some analyst comes out and downgrades it. That's why you always put that stop in below it once you get into a position and you maintain it. If you take a little bit of a loss, you do. Sometimes you'll take a loss, it'll take off on you, and you're like, oh, wow, why'd I do that? But you can't do that. You got to follow your system and believe your system. Sometimes it won't come down and hit that, and it goes up, and you're like, wow, I'm a genius. You followed your system. So I don't give specifics on here's what I want you to do, but I'm trying to teach you how to look and make these decisions yourself by providing you with a list of stocks that have a potential good trend up and potential for giving you a better chance at a successful trade. Hopefully that answers. That was LeBrian, and I also talked with Payment on that too. So again, hopefully that answered the question.
Yeah. I think the big picture, big thing that's going on right now is, if you drop back and look at the macro side of things and go, what drives markets higher? And you saw this, during mid 90s, where you had an expansion of the internet and growth in the internet. What grew the internet? Well, availability of money, the availability to borrow, to develop, to expand your company. And in this case, it was the internet, boom, bust. And once money dried up and earnings and revenue started to slow, market turned and you had the dot-com bust. Look at the housing market. I have a friend who literally in this area came back, moved in this area, was doing landscaping, got availability, easy money, and he grew his net worth in about 4 years to a $50 million net worth. And then by 2009, he filed bankruptcy. What happened? Liquidity expanded and it dropped. It expanded and contracted. Fast forward to 2000, say 10, 13, up until the pandemic, and you had expansion of money. That expansion of money. You had the pandemic happen. What happened again? AI, expansion of money. What do we have today? A contraction of money. And I think that is what from a macro standpoint, you have to have that in your toolkit. You have to just look at, is the Fed lowering interest rates? Or is the bank lending more money? Those are things to take into account.
I think it's interesting.
They may be taking applications, as Bob has said.
You put it up, and
Go ahead.
I put it up about how people are using buy now, pay later to buy their groceries.
Oh,
and that's a big sign to me, along with, Jan works at a big aviation company that upgrades private jets, and it's all very wealthy people and people from Saudi Arabia and the Middle East who bring their jets in, and it's slow right now. It just slowed. Okay.
Yeah.
And that's
well, they're
another
saying
indicator.
domestic flights in the United flight costs are dropping
They are.
because nobody's traveling. So those are like macro things that you take a look at, and then you build your fundamentals on the companies you like, and then build the fundamentals on the sectors you like, build the fundamentals on the companies you like, and then look at the technicals. What are they telling you? You put that all together, and that's how these big hedge funds, institutions, this is how Fidelity looks at stocks. You know, with a mutual fund, you can't sell everything. You got to stay invested, and that's why you don't see big movements there. But just look at it from a bigger picture as well.
Yep. I want to say hi. Margaret's out there. She's driving back from vacation, so she gets to join us today. She doesn't normally. So hi, Margaret. I see you're here. Glad to have you. Drive safe. Don't take your eyes off the road. And we got Patrick. We haven't heard the European report from the weekend. What's going on, Patrick?
Well, I've been reading in the FT, what's really important is what China has just said, the spokesman. He has said categorically that there's no talks going on whatsoever at the moment, and they have preconditions regarding discussions. They won't talk to the US unless they drop the tariffs, and then they will negotiate, and that's their position. So I think when Donald Trump says there's talks taking place, he may be telling porkies.
Yeah, or the Chinese may be lying too.
Well, I know, but even so, Donald Trump has a habit of lying a lot when he opens his mouth. So, or he comes out with incorrect facts. It's never fact checked really against the truth. That's the problem when you deal with Donald Trump, and I think that upsets the market because it creates uncertainty when the president is not actually leveling with people really honestly.
Yeah, that's people's opinions about different politicians, and mine differ depending on who it
Another
is.
thing, let me stray away from politics. I noticed also that LA exports have into Los Angeles, the arrivals have fallen by 30%.
Absolutely.
Yeah.
Yeah.
But
And you can also go and see all the Chinese factories that are shut down and the people in the streets now protesting. So that you don't get to see.
But another important thing is that there's been a lot of front loading with bonded warehouses trying to extricate themselves from tariff taxes, and there's been a huge influx of tariffs to beat the deadline. Imports.
Yeah. I saw they're moving. Apple's really moving all their production to India. It looks like too for their iPhones.
And here's one for Bob. I hear in Chinatown, a place called Pork Chop House. They're having a problem. They say they've raised prices by 10% in the last week, and if this Mexican standoff continues, he's going to have to raise his prices by 50%. And he said he'll be near bankruptcy if the tariffs reach 125. He'll have to file for bankruptcy.
There goes Chinese food night.
I went and bought a big package of Bounty paper towels this weekend. Okay, you can't believe the prices. A big one of the Bounty and also the Shaman toilet paper was $60 combined.
Oh, not
So
Costco.
is that because of hoarding or is that because of gouging? Because
gouging, I would think has gone into effect. I mean, the same before it was like $40, $45, in a short period of time, $60. I mean, it's I've been stocking up on it because this is definitely going to have an effect. And you can see, I don't know if you're walking through your shelves, but I saw this weekend the shelves look a little more light on product.
Bob, make sure you send some of that toilet paper out to your yacht.
I'm going to
Let me spend some time out there.
You're going to have to go for a dip in the pool,
A lot of chlorine.
I noticed you're a little shy on toilet paper.
Add a little chlorine to that pool.
I've worked for large companies. I've worked for large companies, and I work very closely with China, very closely with India. And from experience, China could run, you can give them the design and they could run with it. Where India struggles and again, not just one sector, multiple sectors. It will take a while for India to catch up to anywhere
Totally.
near China.
I agree
So
with you, Paul.
it by skill set, they're not even in the same league.
But they
But
already
then
have
also
production. They
there's
already
an
have production in
integrity-
India. They just need
But
to
not-
ramp it.
There's an integrity issue too with them.
They lack the sophistication. I mean, for maybe smaller stuff, but for what I've worked on that, involves assemblies and close tolerances and so forth, they just can't. It takes a long time for them to grasp.
But
There's
they're
so
doing
many
iPhones.
conversations.
They're doing iPhones now.
I'm not saying it can't be done. I'm just saying from a holistic standpoint, having worked with both countries. That's all.
Yeah. Hey,
And
Bill,
I
what
just
you
wa-
got?
I have a situation where I
Uh-oh.
have a friend of mine over in China, and I contacted them. How are things in China? And she said the factories that sell to America are closed, not making anything whatsoever.
Yeah.
And she blames, of course, on the tariff, and no comment whatsoever about the tariff that China put on our stuff.
No.
So consequently, what we're getting in the news regarding China is probably very true.
Yeah,
Yep.
I think it, and the thing is, it's like, when does that start to filter into the system that where the average American consumer starts to notice it more and more? Is it a week? Is
Bob
it a
already
month?
has.
A quarter? Well, Bob's seeing it, but I mean, when does it really become noticeable to the average person? Bob's aware of it.
Well,
We're aware of it.
I would say to you that it's really this. I would say the average person is really feeling the pinch. How can they afford that? Think about it. That's
Yeah.
a lot of money for paper products.
Oh yeah.
I mean, $60, you can put dinner on the table, reasonable food on the table for 2 nights at least, right?
But
Approximately.
I can't believe the supply chain is out already, Bob. Like you said, it's gouging right now.
I'm not saying they're out, but I would say that the shelves look limited. Like before you walk down the aisles, they stock the stuff on the floor and everything. That's
Yeah.
not the case now. Now it's only on the shelf and it's limited. But I would tell you the price is probably limiting people also. Because it is what it is, right?
So you're seeing price increases that
Oh,
you're
yeah.
noticing.
big.
Okay. I haven't
Yeah.
noticed it, but that's scary.
Do you shop or your wife shops?
I'm not married and I shop.
Oh, I'm sorry. All right. So
His maid
know-
shops for him.
I just want to point out, this is not too dissimilar. I read in the Wall Street Journal that there's more retailers, investors than ever. And the theme is right now, retailers are buying where institutions are pretty much out. And retailers is like 35%, which I find it hard to believe, but upwards of 35% of the market. And the other piece I will know is that I am seeing stocks like Tesla, all the meme stocks are kicking up in gear right now. That meme meaning stocks that are very popular on Reddit or the younger retailers, not the newer investment type crowd. So I'm seeing that. So
Do you think it's a buy to dip kind of mentality, Paul?
It totally is.
I mean,
we've been trained for 5 years. If it goes down 5%, buy it.
Yeah.
And it worked. It worked.
I know. I would agree with what Paul's saying that there are more retail investors right now than ever before. I was interviewing a gentleman this weekend, and he was saying to me how he made money in Bitcoin, which is basically bailed him out of a tight spot. So yeah, I truly believe that, but I do believe also that a lot of them are losing money.
I agree with
There-
that.
Mike Taylor, runs the ETF called Pink, is the symbol. It's a health care kind of fund ETF. He made the comment a lot of fund managers out there have only been in the business for the last 15 years, and they have never gone through a serious market downturn or economic slowdown. They went through the pandemic, which was then, 2, 3 months later, pumped up again with liquidity. But they've never gone through anything like the great financial crisis. They've never gone through the 70s, all the way back to the Great Depression. And you're seeing a lot of these guys really don't understand what's happening. And I think on the RIA side of things, you're also seeing that too. It's, the old guys, I remember it was 6 years ago, what was it, 55% of those financial advisors in the country were over 50 years old. And that a lot of them were looking to sell their practices, especially those who are in their 60s, and they were in a rush to do it. Because they were tired of being kicked around the block. Now you have a younger generation who's now managing money both from a mutual fund or ETF or a private institutional approach, or just your local financial advisor. And they've never been through a contraction that we could be in the midst of. And so that's, I mean, it's very interesting. It's a younger group of people managing money, but also in a retail standpoint, the pandemic opened the door for people to get in, to become a stock picker.
Well, they don't remember.
They don't remember.
Right. The Great Recession of 2008, 2009. They don't remember what happened then.
Well, most of them are young.
Right. Exactly.
Yeah. Yeah. I think it's the guys with gray hair who remember
no
all
hair.
that.
Or no
Yeah.
hair.
2008, 2009 keeps me aligned.
87 does me too.
I remember watching my good friend in Birmingham pack up his house and move and he had a new Porsche every 2 years, new turbo, 100 and some odd $1,000 car, packing up all of his stuff and driving away in a used Prius to move in with his in-laws. I mean,
Got to do what you got to do.
You got to do what you got to do. But, I think that's an environment a lot of people can't remember or weren't really aware of.
I'll also notice that some of the retailers are very knowledgeable. I talked to them, and you could tell guys that don't use charts and guys that do. And I'm surprised how many of these younger retailers are pretty knowledgeable on, how to use charts and knowing that's the lingo that we say, the SMAs, the Bollinger Bands. And some of these guys are more savvy than ever,
I think you got to go deeper than that, though. I mean, how many people, Kyle Bass has been pounding the table about China for how many years? Just about how screwed up their situation is. I think, it isn't all about, moving averages. It's about, if you're going to use moving averages, apply it to the monetary policies and all that and see how that changes. I think that's where it's really important to expand out from what is being, in a lot of ways being taught. You can put rate of change and moving averages on economic conditions. And most people don't think of that. Something to consider. All right. Anybody else got anything? We got 2 minutes before market open. Should be a really exciting week.
Yeah.
A lot of reports. Jobs, Jolt, and the whole bit.
GDP.
So it should be interesting. And remember, it's the end of the quarter, so you try to put lipstick on a pig.
In a month, not quarter.
Oh yeah, right.
April. Yeah.
Do you guys feel more fearful than ever, like right now, or do you feel like compared to last week? Do you feel, oh man,
I'm a stoic.
I'm seeing more stabilization right now than I did last 2 weeks.
Mm-hmm.
Yeah. I got nervous yeah.
Go ahead,
Paul.
When I read, do you guys see what's going on with the farming and how much food is not being shipped?
I saw the headline on CNBC this morning. They're talking about
kind of sad.
Yeah.
Yeah.
Did you hear about housing? The same thing this morning. You can buy a new house. Typically, it's they're getting a premium on new houses. Let's say equal home, existing home, new home. You can buy a new home at the same price of an existing home today.
Wow.
Reported. I heard that this morning. CNBC.
Hmm. Wow.
I feel sad that there's people that need food and now we're gonna let the food rot and it's just in itself, you know what I mean?
Yeah.
Well,
But it's partly
know.
their choice too. I said
That's to
people
come.
are gonna go hungry, especially in China, because we export food. And
Yeah.
I don't think that their leadership, Z, cares if he starves these
But a lot of
people.
our food comes in from China and food comes in from Mexico.
What food comes in from China?
Take a
Your
look at
noodles.
go into what you call it,
Yeah,
noodles.
I'm talking about
Look-
wheat
look at-
and soybeans and corn.
Go look at Amazon. A lot of the stuff is frozen when it comes in. Read the back of the packages. They all say organic international and all these other things. They're not coming, it's not coming from here, that's for sure. They're freezing
Hmm.
it, get it on this side, they defrost it, they put it on the shelf.
Well, we got
Interesting.
enough. I live in food country, so we got a lot of food here.
Are anybody's complaining regarding shipping food out? Export food?
Not yet.
Not yet.
Most of that stuff has already been sold, and the new crops are not just being planted today. So we'll see. It's
Hmm.
still early. We'll see. It will be an issue at some point.
Yeah. Hey, Mark, we
Oh.
gotta wrap it up.
I'm good. Yep.
All right. All right. We'll be back at it tomorrow.
Good
Just to
discussion.
let you
today.
know. Yeah, very good discussion. There will be a new link, so make sure you find it on the Discord, on the website, or on the email that goes out twice in the morning. So if you have any issues getting on tomorrow, just text me and we'll get you in. So have a great afternoon, great week. Thanks for your participation. Remember, this is not advice or recommendation. These are opinions and ideas, and you need to do your own due diligence before making an investment decision. With all that said, have a great day and live loud.
I'll see you guys.
See ya.
See you guys.
See ya.
See ya.
Bye.
Thanks, guys.
Bye.
Great
Bye.
meeting.